This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning, even though we did have the minutes from the Fed's recent policy meeting yesterday, actually coming in a bit on the hawkish side. So stock indices putting in a good performance yesterday and also this morning. So we have to basically say that this market is holding up very well in spite of what could be construed as bearish news. So that in itself suggests that the main trend is still higher. So nothing really changing in our long-term view, also in our short-term view as well. We continue to look for further gains in stock indices. Over in the foreign currencies, seeing the dollar index making an 11-month high in the overnight trade. This primarily due to the release of the minutes from the Fed's meeting. As I said, we're a bit more hawkish than anticipated. We are seeing a little pressure in the British pound, even though we did have UK retail sales coming in stronger than expected. Also, we are seeing the Australian dollar holding up relatively well, even though we did get a report indicating that Chinese manufacturing may have weakened, according to a more recent survey. From here, we would expect lower prices for the Japanese yen. This is mainly due to our ideas that the increase in Japan's sales tax in April will continue to slow Japan's economy to the point where it is necessary for the Bank of Japan to come in with more economic stimulus. More stimulus means lower interest rates in Japan, and lower interest rates means a weaker yen. So it's the yen that I would focus on the short side. I think this is a trend that should last for quite a few months. Over in the credit markets, futures holding up very well in spite of the hawkish tone to the Fed minutes that were released yesterday. Also, we did have several economic reports today, in fact 4 economic reports that all came in stronger than expected, and yet treasuries are holding up very well. With futures holding up much better than expected in spite of those hawkish, or at least slightly hawkish minutes, we would have to expect that the main trend is higher for treasuries. Also, we do believe that the Fed from time to time will talk a bit hawkish, but in fact I think that they will not be able to raise interest rates until 2016. This is contrary to the consensus view that the Fed will raise in the middle of 2015. So our analysis suggests that nothing has changed. The main trend remains higher for treasuries, especially at the long end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.